Good afternoon, everyone. Today is Sunday, May 17th. We are back at it again with Relative Edge. We got a crazy video lined up for you guys today. If you guys like the video, please throw a thumbs up, throw a comment in the comment section. If there's a question you guys had, please let us know. We're here for you. We got Rich here. How you doing, Rich?
Hey, what's going on, Jabbar? What's going on, audience?
Yes, sir.
Wherever you are, good morning, good afternoon, good night. You are at the Relative Edge.
Yes, sir. We're here, so let's hop right into it. Let's start as always. Let's get into the 10-year yield. Let's check this out. So the 10-year yield last week was insane. So this bearish channel that we've been
Oh, I don't see your screen.
let me switch this over real quick so you can see.
Please stand by for these messages.
Alright,
Technical difficulties.
can you see now?
It's coming up. There we are.
Alrighty. So let's start here with the 10-year yield. So the 10-year yield last week, it broke out of this bearish channel, the sideways consolidation. Look at this. We actually closed right at this line, right at the top of this upward resistance, this downward resistance right here, which is very interesting. So the first touch right here was 2023, October 2023. The second touch was January 2025, and now we are above here. Whenever interest rates get in this range, the market doesn't like it. Stocks start to sell off. So if this continues to go higher, the market will likely sell off. The Fed will likely step in to see if they can buy down rates. But if you look at the long-term chart trend, this is a very dangerous spot to be in. Just because, let me zoom out a little bit. This is basically a bull flag right here. So if we confirm out of the top of this downward bearish channel right here, that basically is a risk of a credit collapse. So we're definitely going to watch that this week. And let's just see where we open at the week. We open higher above this, and now we're moving up. So big things to watch this week. Let's see how that affects the dollar. Whenever interest rates go up, typically that is a strong positive force on the dollar. Think about it like this: as interest rates go up, they're offering a higher yield for our currency, so it's more enticing for other countries to hold it, and therefore there's more demand. So the strength of the U.S. dollar will go up, and you can see that's what happened last week. A big move up last week after the week before closing below this resistance, this support actually. So you can see that this 97.9 level over here was previous resistance, meaning we saw selling pressure. Every time we hit it, then we broke out of it, then we came back down. This was a false breakout here, and we never really closed below the bottom of this wick here from April 13th, and strong reversal right here. So the dollar now has some upward momentum. Let's see how that affects things this week. And of course, as the dollar is still correlated very slightly with oil, the correlation is breaking. We can see that's going to push oil up as well. It seems we still haven't got much of a resolution with regards to the Strait of Hormuz, and it looks like we're still holding above $100 on oil. So still some sideways action. This honestly looks more like bullish consolidation the longer we stay above 100. A weekly close above 100 is significant as well. This is actually, if you look at that, last week was one of the higher closes on oil. And then let's get into gold, silver. Silver dropped last week, actually had a crazy volatile week, and went all the way up to $90 last week and came back down and ended up closing negative on the week after a crazy run, and had an amazing, insane drop. Look at this drop. Check that. That is a roughly 15% plus drop from its highs in 2 days, basically. So insane drop for silver, and the whole week gold pretty much just traded sideways and then slowly traded downwards. And this is dangerous territory right here. We just got rejected by the upward trend line, the upward resistance line So if this week if we see a close below 4,500, that can mean a potential flush down to the next support would be 4,300, and then after would be 4,000. So, and then if even lower would be the bottom of this trend line, the bottom of this bearish channel. So some things to look out this week: if the dollar keeps going up, if interest rates keep going up, that's going to put pressure on these assets. And then let's just take a look at the SPY last week, which is opening a bit lower, came off the highs. SPY still not really showing too much weakness in the short term. We didn't really move much higher last week, and we had a crazy flush out on Friday. But right now, it looks like the SPY is a bit exhausted. So we're going to take a look at that this week, see if this continues to pull back. But if interest rates continue to go up, we can expect the dollar to continue to go up and the S&P 500 to sell off. So just stuff we're seeing this week. Definitely want to turn this over to Rich and see what he is seeing this week. So, Rich, you ready to take over?
If I left off on the S&P 500, I'm going to pick it up from here, and I just want to show the weekly chart. If you look from right to left, you see what's happened in the past history, and on the last bar, the week of April 6th. I just want to go week by week on each bar as a week, as got this megaphone. So what you see from let's see here. Just hide this. The strength of the S&P 500 from the week of July 21st, 2025 was on a downtrend. Even though it moved below, it's still, the strength was still sloping down, and it hasn't broken this strength of the buying going down. So the week of April 6th. Let's go to the next week. We start to move up. There's an April 13th, and breaking out of this megaphone pattern where you see these weeks here, starting from the week of October 27th, 2025, it moves down, it moves up, it moves down again, broadening this pattern with the megaphone as it's building up, and also, as you see, switching from March to March 30th, we're going up. This is 3 weeks in a row, and as it continues to go up on an uptrend at S&P 500, when you have a megaphone, when it breaks out, which it closed above, this is bullish. And that was the week of April 20th, and it kept on going. So I decided to put in this dotted line and not only when it broke out on the upside on the weekly candle, if you look down on the RSI, it broke this downtrend. It actually strengthened beyond this downtrend, so it broke down, and there was a follow through. So, but this bordering trend, I think, is still in play for a couple of reasons. One, it's way overboard, completely overboard on the market. As Gerard was explaining, the interest rates is going up, the market coming up, something's going to break. So, in addition to maybe it was anticipating some things that was going to happen with China, it's of states, not his a bunch of people from his administration. You're talking heads of industry. You're talking BlackRock. You're talking Nvidia. You're talking Apple. You're talking SpaceX. All the CEOs, Meta, and much more. So, and we're in midterms too. Also, which at that time we get a bullish pump. The president wants to look good for their party and administration. But we're way overboard. Something is going to, well, at least my bias right now is, behind the scenes, there's some private equity firms that are getting blown out, possibly even some hedge funds because they're short. Now, so this is the week. That's the weekly chart. If you go to the daily chart, you're gonna see this, which was Friday, and as you can see, if I actually update this for near term, because when you're looking at the RSI for bearish and bullish divergence, you want to see what's happening above and when it dips below for follow through and confirmation. As long as it's holding below this midpoint, which is this yellow line, let me switch this to red, make this solid. We're more than likely going to see some follow through unless we get some good news. Also, new Fed chair that just was sworn in, and every time we've had a new Fed chair, we drop. And that's just data. Every time there's a new Fed chair. And I'm seeing something here as I'm looking at the charts. We, on the daily chart, have a gap right here, possibly fill. 70% of gaps usually fill.
Yeah,
So
looking
do that.
looking very overbought there.
Yeah, very, very overboard. It's also there's some rumblings that for quite some time now, Warren Buffett was famous for calling the markets and especially going into cash, especially from the last time he was going into cash before that crash, and he's heavily in cash right now too. Also, in addition to Bitcoin, which are never sell your Bitcoin. He's actually talking about selling his Bitcoin to pay dividends of his STRC, which he strategically is using to purchase more Bitcoin.
Michael Saylor said he was going to sell some of his Bitcoin.
Yep.
Really?
In order to pay the dividend of is the new publicly traded ticker symbol STRC Strategy Inc.
Oh wow.
Yeah. So in transition to that, let's go to Bitcoin. Yeah. So we're on the daily chart, and as you can see, we have a rising wedge, which is bearish on a downtrend. And if we zoom in here, we will see that as we rose up here and we pull back where we see resistance here becomes support, and we moved up and came back down to support. Just looking at this part right here. Now this forms an M. Now when we move up after we form this M, and if you can see this, let me zoom in a little closer so you can see it clearly. This midpoint of the M going up and coming down, this bar went lower than this bar. You're talking a liquidity sweep. When you see that and it goes back to the upside, it usually there's a follow through to negate this M pattern, which doesn't mention move on the downside. But it didn't. You talking an engulfing this red bar also, and it's followed through into the downside. So, and looking at a larger view, you're talking this run high low, high low, high low, high low, high low, high low. This when it closed broke structure. No more higher low. It's going sideways, and you get into the beginnings of a follow through. Now, this widening and wedge, the measures move is at the bottom. So you're talking a possible move as Bitcoin in context of the S&P 500, which it should follow because Bitcoin is still considered, I'm using the air quotes, you can't see me, a risk asset. Measured move is going to be 64,918 area at least. But if you take a larger look, let me go to the weekly. You talking possibly this area down here from March 4th, 2024. If you go to the top of that cluster to the bottom here, which is a lot of liquidity, which the market looks to actually being pulled to like a magnet, you're talking around 50,000 area, very very possibly, very easily to go to.
Hmm.
Yeah. So I just want to show you one last thing with regards to Bitcoin. I want to go to the Bitcoin futures where it was a gap up at around. Let's pull this back here, just below, just around, just below, just up to 84,000. It traded into it, but it never quite reached there. But it will fill eventually when we get into the bull market. The bear market supposedly will end cyclically this October. So there is a lot more move to happen. So we can go down to 50,000 and rise up from there. You know, we could easily go to 50,000 in like a month and a half, which is no problem. Which actually coincides with the summer bull run for both markets, equity markets and the crypto market. Take a pause in August, September, and go sideways to up in October. And looking forward to a bullish year next year in both markets. And that's what I have for this episode for the relative edge. And
Let's start with the Dow gold ratio. Last week was very interesting. What's going on here? But keep in mind we have this very strong 11.16 level, which is strong resistance and support. Previous support here, broke through, became resistance, and now if you zoom in a little closer, you can see it was resistance, broke out of this bearish channel, and we're getting up in this resistance range here. We were trading above this upward trend line here, finding support, bouncing, broke. And last week
oh,
we closed on the inside, so we still are getting rejected by this line. We open above today on the Dow gold ratio. And so I'm interested to see this week if we can stay on the bearish side of this pattern and flush down back to this bearish channel or this support right here, the 10.6 support. And if we can break that, then we'll come back down likely into this bearish channel. That is what I'm expecting. In terms of how far this can rally up, I believe the upward resistance will be found at 11.15. So we'll see what happens there. Hop into gold versus silver. And keep in mind, one of my clear rules that I've made is when you're trading relative assets, the asset that's in the numerator, that asset is going to outperform when the RSI, the relative strength index, is above the 50, above the midpoint. And vice versa, the denominator is going to outperform when the RSI, the relative strength index, is below the 50. So last week, we saw early in the week, which is funny because I actually thought silver would run later in the week, but it actually ended up running early in the week and pulling back. It ran all the way down to the bottom of this RSI, which was, I actually drew a measured move here, taking the depth of this cup, this inverse cup and handle, and it almost was very accurate to where this bounced at. But we came back up and look where we closed last week, 49.79. So we're still below the 50 on the RSI. When we're below the 50, you want to be in the denominator. So silver is still outperforming gold despite this massive 2-day jump up. I still expect this to come back down this week, but last week I was right about us breaking down in this trend, in terms of us coming down to the bottom of this trend line. So the next test would be to break below about this 57, and then break below, make new lows, and break out of this bearish channel. So definitely want to keep an eye on the RSI. Want to make sure we're staying below 50 to see if that remains bearish. But it looks like right now we're above. We're at 48.32. So right now, still better to be in silver than in gold. Silver versus silver miners. Again, still trading sideways, hugging that 50 line. We're slightly above 54. So right now, it's still better off to be in silver than it means to be in silver miners on the daily chart at minimum. So a breakdown of this upward trend line right here would mean, or the 50 would mean that's your entry signal to get into silver miners. That's when silver miners will start to outperform silver. So until we break below that 50 right now, silver's still ahead. And I do expect we are running out of time here. If you look at this bearish downward channel, it's either going to break out or it's going to break down. So we're consolidating here. We actually slightly did break out, if you see here, but it's too close to call it. This week is definitely gonna be confirmation of that. Spy silver, very interesting this week, last week, because as I mentioned in the weeks prior, this 9.55 level, extreme resistance here. So resistance, we broke below was resistance. This line that was support became resistance at the same level. And we broke below on the RSI, right? We broke below 50 and below this bullish channel. And then at the end of the week, within 2 days, we broke back above. So the right now, until this breaks below the 50, it's still better to be in the S&P 500 than it means to be into um,
Uh,
silver.
yeah, I think that's going to break the resistance on the upside.
You think this is going to go higher this week?
Yeah, the reason being is that actually, let's see here. What I believe is going to happen is they're both going to drop individually. Reason
Which
being
one
is
do you think
that
is going to drop more?
what I'm thinking is because of the oversold spy, and we see a break in that near term uptrend. I think it's going to further drop, but then because it's going to drop in the market, and silver is doing so well, I believe some people that are heavily in silver are going to get liquidated, and the volatility and the percent drop is going to be more than SPY. Say, for instance, SPY drops 1%, silver is going to do 4%.
Okay. So you think this ratio is going to go higher next week, this week?
Yeah.
Okay. Yeah, I would have to disagree there. I think that this will get rejected by this upward trend line. I think we're gonna fall back below the 50 here. So we'll see. I mean, I would get bullish on this trend if we get above this upward trend line right here. And but right now in the short term we are above the 50. So right now SPY is outperforming silver, and get confirmation would need to break below this upward parallel channel and below the 50. So a break below there will be confirmation. Um, so we'll see this week.
Awesome audience. See, we had disagreements,
Yes,
but see what happens during the week.
we're not supposed to always agree. We're not supposed to always
We
agree.
can't. We can't. We gotta have difference of opinions sometimes. See
Yes,
something
sir.
different. Let's see. Let the market tell us.
Mm-hmm.
Yeah.
And then the next one I want to go into is the DXY versus silver. And then same deal here, still trading in this downward parallel channel. We hopped above the 50 on the RSI, so back into strength, and didn't allow it to break below the neckline here. We actually did break below the neckline on the RSI and then bounced above it, so we didn't close below it. Um, so definitely keep watching this week. We're actually above that parallel channel, which is interesting here. So we got to definitely watch that this week. For oil, we broke below a silver versus oil chart. Silver versus oil, falling wedge, trading sideways. We were above the 50 on the RSI briefly, and now we are back below. So last week I actually thought this chart would go higher. I thought silver would outperform oil, which it was earlier in the week, and then look at that, it opened higher, it opened actually middle, pushed higher, and then ended up closing lower, closing
I think
lower.
someone said oil is gonna go up higher.
Yes, you did say that. But
Somebody.
you said that the week before. You did say that the week before.
Yeah.
Um, so let's see if that continues this week.
Yeah.
Definitely want to keep an eye on that and look in the RSI. I mean, if you do look at the RSI on the weekly, we are below 50. So we're not consolidating in the right direction if you are silver bull versus oil at least. So yes, Rich, right now you're in the lead.
Yeah, hey, the mark. We just got to make sure we manage our risk at all times. But I think it succeeded as live. If you look at oil live, it's well, for oil. I always look at U.S. oil, USDT. I anticipated it as there was resistance at 100 and it will hold at 100, but now we're at 102.45 live
Mm-hmm.
and coming up into another resistance at 102. Well, the next resistance 103.06. However, geopolitically, I think we're closer. We're closer to a peace agreement than not, but it's until there is no peace agreement. I believe the oil is going to continue to climb.
Hmm.
Yeah.
Yeah, so I still think oil long term will climb. I do believe that silver will outperform it, though. So I think silver will go up faster, essentially. But
It. Yeah.
and the reason why is because on at least the daily chart, and we'll see if this plays out this week. But we were forming lower lows on the price, but RSI was forming higher lows, and we came down and we had an equal low on the price, but RSI had a higher low, and then we just formed a higher low last week on price and a higher low now on the RSI. So, but we are below the 50. So
Yeah.
we can't really get any confirmation until we break above the 50 again. Um, so we'll see what happens. But this can kind of be seen as an inverse head and shoulders here. So we'll see.
And I actually do agree with you on this. I see that if as oil is advancing, silver is actually strengthening. There used to be a pure inverse, but something's changed. Oil is up and silver is up right now live, which shows the strengthening of silver against oil.
There you go. So definitely something to watch. Either way, I think both silver and oil are great assets to be
Hmm.
in the next year, 5, 10, 15 years. I think those assets,
Oh,
commodities in general, are going to
you know what I
outperform.
think? Hey, Jabari, you know what I think is happening?
What?
I think people are still buying oil, but they're hedging with silver.
That could be a thing too. Yeah. I think people are buying commodities in general.
Because as soon as there's a peace agreement, silver's gonna spike and oil is gonna drop. But they got silver for hedge.
Yeah. Um, I think I mean typically if you look back in history, oil, silver, and gold run in tandem, run together. So this was
Mhm.
actually a rare occurrence where they didn't, where they ran inversely. And
Right.
earlier in the week, we did see days where they both were rallying, and they
Hmm.
both were selling off. So I think that inverse correlation is starting to go away slowly, but I mean
Yeah.
it hasn't fully broken.
Right.
But I do expect them to rally together.
Yeah.
Um, that's my guess. I don't
Yeah.
think if oil, like say if the war, I mean because war is typically bullish for precious metals. It always has been, with the
Hmm.
exception of this one war. Um,
Right.
so that's a very interesting thing that we're
Yeah.
seeing here.
And I think there's this change in sentiment here. I think they're buying more silver now. The inverse, the trade. So good. Yeah. Good job on buying those dips, man.
Yeah, yeah, I'm still a very strong bull on silver. I still think this year we could still see 180.
Awesome.
So we'll see what happens, but we got to break above. I think around break and hold above 80 to 90 that range, and once we can close on a weekly, monthly chart there, you should see a couple months of crazy bullishness. But we'll see. And lastly, we want to get into the 10-year yield and the dollar. This is known as the
Whoa.
MMRI. Look at this chart. This is a crazy breakout.
Whoa.
Yes, so last week, this was insane actually. Um, Typically, if you look at this trend line, right, every time we get towards the top of this range on the RSI daily chart, we find rejection, 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 rejection. But this time is different. Literally, this time is different. We broke out of the sideways consolidation, and we actually made a higher high here. Higher high, RSI, higher high. So that's a breakout here. If this continues and doesn't reverse this week, there is going to be stress on the markets. Like, there is no two ways about it. Um,
Yeah, it actually coincides with that change in market structure and sentiment. Broke to the downside on Friday, and I think there's going to be a follow through,
mhm.
at least to the end of the month. I would say.
Yeah, and so I actually like got use a different chart just to see what this kind of looks like. It's the same chart basically, but
Oh wow.
it goes back further. And check this out. We were trading in downward parallel channels. This is still the 10-year yield times the dollar divided by 1.61. Downward trend line for years from 80s, 88, 1988. We broke out of that downward trend line in 2022, right? And this is bullish consolidation. This is a bull flag. And then check this RSI out on the monthly chart.
Yeah.
That is not good. That is not good.
Yeah.
So that could mean if we continue to move higher, especially if we make a higher high here, or even honestly closing above this 282 level, which was resistance here, support here, resistance, strong resistance, strong level right here. We can see we've been consolidating at this level for since 2022, so 4+ years.
Hmm.
Um, if we break any higher, which it looks like on the RSI is telling us we broke, this market's going to sell off, guys. We're going to see a credit collapse. When we see interest rates in the dollar roll up extremely high uncontrollably, there's going to be some selling in the market. So that goes to
Hmm.
Rich's thesis here that we'll see a pullback in the market. And I mean, after we seeing record runs to highs, the fastest run in history, I mean that thing's going to cool down, and the faster it goes up, the faster it comes down. At the end of the day.
Oh,
Um,
yeah.
but one chart I actually did want to take a look at before we hop off here is the GDX versus silver miners. So GDX, that's the gold miners, and silver SIL, that's the silver miners, right? So in a commodity bull cycle, silver follows gold. Gold goes up first, silver follows, and silver outperforms. So that means the gold miners are going to underperform silver miners. Silver miners are going to outperform gold miners.
Hmm.
And check this out: gold GDX divided by SIL, we're below the 50 on the monthly chart, so that means it's better to be in silver miners. That means we're still in this commodity bull cycle. On the weekly, we're still below the 50. We're actually at 35. And look at this. This is testing this level right here. We're getting
Mm.
rejection, constant rejection here.
That's
We're getting lower strength on the RSI.
that's a Wyckoff distribution pattern right there.
Yep. So that's telling me that this gold silver rally, this commodity rally, is not over anytime soon.
Yeah.
Um, this is telling
Silver's
me,
outperform. Yeah, silver's definitely outperforming gold.
yeah. So, but this is specifically silver miners versus gold miners. So
Hmm.
this is very interesting stuff here. We look at the RSI, we're below the 50 um, on the weekly, the monthly, weekly, and daily chart. So
Mm.
if you look at it in this perspective, like I said, silver outperforms gold in a commodities bull cycle. So there are a lot of calls right now that silver are going to come down to 55. I'm not in that boat really, um, and I'm looking just because of these relative charts are telling me that this ratio is going to break down here. This
Mm.
looks like it's brewing a breakdown. So just keep that in mind. This week you definitely want to be in silver miners over silver or over gold miners. So just some of my thoughts, but yeah, if you guys like this video, please throw a thumbs up. Please like, share, subscribe. You guys have a great week. Rich, do you have any closing words?
Yeah. As always, trade the setup, stay with the trend until it ends, and manage your risk at all costs.
Yes, sir. You guys have a great week. All right.
All right.
See you later. Bye.
Later. Bye.